My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CBC or tweet me at Jim Cramer. It was like a dream today being back downtown again. There was so much symbolism to being on the floor of the New York Stock Exchange, and it made me feel like the old days where the action is. What's the real point of all this reportage? Wall Street! I don't want to get too existential in a down day, a day where the prospect of higher interest rates spooked the market. Dow slipping 126 points, S&P declining 0.08%, Nasdaq actually advancing 0.49%. But for me, it was a double Wall Street homecoming. The first time being when I was hired by Goldman Sachs almost 40 years ago. The second time shortly after the legendary Mark Haynes passed away, and I started working on Squawk on the Street. Granted, it was a bit jarring sitting side by side with my partners Carl and David, reunited for the first time since the pandemic hit. The floor's slow right now. They're being careful, which I like. But it's still got what made me want to come there in the first place. So my parents took me to the gallery when I was 5. No security back then. And a nice trader gave me a roll of ticker tape. Wow. The next time I went as an employee of Goldman Sachs, where I was a helpless stooge, being knocked over repeatedly by clerks, running to place orders, knocked over until I guess they felt I wasn't worth knocking over anymore. These days, much of what's done is electronic, the stock market equivalent of what Cramer fave TradeWeb does for bond trading. More on that later, but the excitement's still there. What drives it? Well, in some cases, it's stocks like GameStop and AMC that are having stunning moves as they're being bid up by a throng that just keeps winning. Both companies have taken advantage of the throng to raise capital in order to fix their balance sheets, go on offense. We don't know what GameStop's planning. We're going to find out maybe when they're put on Wednesday. But AMC wants to become the most powerful movie theater chain in the world, perhaps as part of a larger hospitality scheme. Maybe CEO Adam Aron gets it from his history running Vail Resorts, Starwood Hotels, and Norwegian Cruise Lines, to say nothing of his successful ownership stake in the 76ers, where he trusted the process that has them in the playoffs. All those are compelling stories, especially in a thinly traded market like this one where so many professionals are still on vacation, making it easier for the home gamers to just really assert themselves, if not take over. More important, though, the New York Stock Exchange has both real and symbolic functions. The exchange introduces initial public offerings, at least the ones that they've won versus the Nasdaq, and there's a feeling of tremendous excitement as floor traders crowd around the new post of where the offering is to figure out what it's going to open at. Now, we're at post 9, once a hub of trading. Now we witness the principles of new companies ring the bell, a joyous moment filled with promise, even if that promise is sometimes chimerical. The second thing that goes on, though, is what I love today, because it suggests the pandemic may be waning. I'm talking about people jawboning over the price of goods to get the best price for their customers. On a day like today, that means giving traders at big accounts what is known as a picture, what a stock looks like, whether there are big sellers, whether buyers might be willing to pay higher prices. Now, you can't give secrets. In 20 years of trading, I never knew who was on the other side. That's forbidden. You just want to feel a sense that you're going to see a curveball, maybe a change up, or maybe something right down the middle. Nowadays, it's possible that most accounts don't even care about what's known as a floor look, because so much is done electronically. But if they care enough to ask, today would have seen more sellers than buyers. Okay, that's a funny phrase that sounds like circular reasoning, as in, why did stocks go down? Oh, more sellers than buyers. That's some keen insight. You really don't need Cramer for that one. But you know what? It's true. Listen to me. There are many big accounts who are selling stocks here far more than those who are interested in buying them at these prices. So the sellers have no choice but to accept lower prices, something they obviously don't want. They're always hoping that more buyers will step in. However, this weekend, Treasury Secretary Janet Yellen, former Fed chair, said that this economy is strong enough to handle or even welcome higher interest rates. Well, that's what causes sellers to just what's known as hit bids all over the place, knock something down. Let's say you're talking about a stock like Nucor. Do you know the steelmaker, largest in our country, that's the second best performer in the S&P 500, up roughly 105% coming into today's session, just at one point got crushed. Those who own the stock might be thinking that a rate hike from the Fed means that business will cool and the price increases in steel will no longer stick, because everything that uses steel other than infrastructure might be hurt by higher rates. Construction, car loans will be more expensive, translating to fewer buyers. How upset are the owners? Well, Nucor bought a terrific little insulated metal panels company today for $1 billion, something that's good for business. Might even send the stock into further orbit on another day. But today, sellers overwhelmed the buyers, hit all the bids down to 1.105 and change, a week after the stock was at 110. Now, to me, I think it's a fabulous buying opportunity. Nucor has multiple years where it does well when the cycle gets going. So we bought some for the Charitable Trust. You can follow along by joining ActionAlertsPlus.com club. But the stock closed down more than 1%, which put me in an oppositional camp, although maybe an opportunistic one. I think it becomes cheaper as it comes down. Sellers obviously don't agree. Of course, that's not how it played out everywhere. We saw buyers overwhelm sellers in Eli Lilly as Biogen got a relatively easy FDA approval for an Alzheimer's drug that might not even be as good as the one Lilly's working on. We saw an oddity on the floor in this one. Buyers in one furious moment willing to pay far more than sellers were willing to sell at. In other words, they took several offerings that were several dollars above where the stock was trading. The sellers simply didn't have time to cancel their offerings, something we see almost daily in the red-hot stocks like AMC or GameStop. Does the floor still matter? A lot of people ask me that. I think so. It can provide more orderly markets on a day-to-day basis. It can give you actual referees if something goes wrong with a trade. It's a very fair place to do business. The big blocks tend to be done upstairs, as they call it, between the big brokerages. However, it will always be a shrine to capitalism at its best. Okay, occasionally at its worst. And nothing, or at least I hope nothing, can ever take away from the simple beauty of traders fighting for you, fighting to buy and sell IPOs at prices that meet the demands of the buyers and sellers. So I wax nostalgic today about being back for the third time on Wall Street and hope that one day you can come see the trading in action yourself. It's an electronic charge. That's right, an electric one. Stocks change hands, something that makes you feel small compared to the forces that move the market. The bottom line, though, never forget that the floor is ultimately a supermarket, with the merchandise being stocks. Except unlike an actual supermarket, the NYSE is more of a caveat emptor institution. Buyer beware. They can't pull that at Cramer, not even at the deli counter. But let's look at it differently. Let's look at it another way. Nobody ever made money going to the movies, but they sure made a lot of money buying the AMC, didn't they?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.